What's up, Chris?
What's going on, Jay? Welcome everybody to the On the Rocks podcast, the podcast where we talk about accounting and accounting adjacent stuff, mostly as it relates to e-commerce, but not only. I'm Chris Gino, and I'm here with my co-host Jay Kimelman. Today we have a special guest. Our coworker Kristy Monahan is here to talk about stuff with us today. So we've got the three of us. Last week we talked about quality control. We went through what quality control QC is, how and when you should do it, and highlighted some of our favorite best practices. This week, we're going to summarize some metrics that we like to look at when evaluating a business, be that in an accounting firm or an e-commerce entity. We'll run through some of what we're looking at in our firm, outline some of the challenges in evaluating metrics, and we'll spotlight why these can be important. But first, what happened this week? Jay, what happened this week? I heard that Congress was doing stuff, but it had
Yes,
nothing to do with taxes.
absolutely.
Yeah,
As I don't,
yeah.
I
What
will
happened?
say it again. I do not see a tax bill happening, but yeah,
Right.
the leaders of our country have passed some spending bills to aid some foreign governments, and while they were at it, they
Yeah.
passed a bill to ban TikTok unless it's sold in 9 months.
Dun dun dun.
And
Uh,
as a user with I think 4 or 5 accounts on TikTok, it's important to me. You know?
right, right. No, I think it's important to a lot of people, and it's particularly important to TikTok. um, it was. I actually at the bowling alley last night. I actually saw an ad on Bowl TV. So there's like a channel that they run in bowling out in like several bowling alleys, I guess. And it was an ad for Save TikTok or something like that. I don't know I can't remember exactly what the hashtag was,
They have
but I was like,
started
yeah, I
that a
guess
while
TikTok.
back.
Oh, had they? Okay, this
And
is the
they
first time I'd
yeah.
seen it.
And was that the one with Susan, I can't remember her last name.
Jay, if you
The
think I was paying
CFO.
that much attention
I don't
to
know.
this,
But I could tell you
yeah,
I was in a hotel the last 3 nights in Denver, and
uh, yeah,
while working, I had seen this TikTok commercial by their CFO about a dozen
oh yeah,
times.
okay,
So they're making an impact
yeah,
socially and via media for
yeah.
sure.
So, well, and the ad that I saw was actually users of the platform. So it wasn't the
Yeah,
CFO or
yeah,
CEO or whatever. It was actually like, I make my living off TikTok because that's where I connect to people, and that's how I even exist at all. And so it was, I couldn't hear it, but you could see that like it's influencer or whatever. Like there's a bunch of different people that were
yeah.
part of that ad. But I have a couple follow up questions, and the biggest one is like, does this really matter? Like selling a company is really easy to do, and 9 months time is a really long like landing strip there. So that seems kind of like not that big of a deal, but but is it though?
Well, there's a couple of things at play there. You know, the
Yeah.
CEO of ByteDance has stated that as soon as it gets signed, which it was signed by the president, and I believe today, they are going to be filing a lawsuit seeking an injunction. And there has been something along those lines. It was somewhere out in either Montana or South Dakota. They had a bill passed last May, and it's been contested and is being held up right now. And we're almost going on
Sure.
a year at this point. So, if this does go to litigation, it could be held up for a long time. Now,
Yeah. And so
the hard part here,
so I
though,
guess my
is you have this product that is built and running on a Chinese server somewhere, in China, apparently.
sure.
And that's where, it's not TikTok. It's the TikTok algorithms that is what is the assets, the digital assets for
Sure.
the company to be sold. And do
Yeah.
you think that they would actually give up the algorithms to an American company to help them, make
Hmm.
the sauce like they've done?
Nah, probably not.
Yeah, no.
Pretty low chance, I'd say.
So they're going to
Yeah.
spin it off and make a a fraction of a platform that it once was. So we
Right.
shall see. I mean, there's a lot of things at play here.
Yeah, and
But
so it'll be interesting to see how that
yeah,
changes or what the impacts are. Like what, because like you're talking about, right? If they're not going to have any interest in getting rid of their proprietary algorithm, right? So what does that mean? Does that mean that the new owners are going to have to create their own? Does that mean what does that do to user experience?
yeah,
And does that just make it does it just completely change the platform? Because
exactly.
it probably will.
Yeah.
And that I think is a huge thing because obviously it's very popular. That's the reason why it's even in the news at all, right? Is
Right.
if it were, I don't
Well,
know, like
and
something that nobody used.
and think
Go
about
ahead,
the
Kristy.
kinds of companies that could afford to purchase TikTok at this point, at its
Yeah.
point of popularity, and what those types of companies
Right.
have done to other apps they purchased in the past. And are they still as dynamic and wonderful as they were initially? I would argue no. Like Skype is a great example, right? Skype was like the number one video conferencing tool, and then Microsoft bought it, and now it's like barely a blip on the radar. So,
I mean, that's really interesting though. But so one, I'd love to talk about this a little bit more because I'm super interested in this. Did Microsoft use all of the underlying technology to build Teams? Like that would be a thing that I would
probably.
think
It
is
probably
like,
did. Yeah.
yeah, right,
Mhm.
yeah. And so Skype itself may not be worth anything anymore, but all of the infrastructure that was built into Skype and all of the like information around that um, could potentially like be used to make something that's completely different but like a lot more utilized. I think it will be like regardless. I think it'll be really interesting to see how it plays out. um, Jay, if you
Yeah,
like,
I think.
obviously we've
Sorry.
Sorry,
No,
no, it's
I'm
fine. Go
sitting here
ahead, Christy.
thinking, with
I
Intuit
just
being the
thinking
tax
about the
company it
content
is.
creators. Yeah,
Yeah.
like the content
Yeah,
creators, right? They're what drive TikTok at this point. And a lot of those types of content creators love TikTok because it is small and they can kind of, be a little bit not subversive, but, talk about, maybe not
yeah,
super popular topics or things like that. And, what I'm sure the big worry is, if a large, well known company were to purchase TikTok, how does that change what they can present or influence or
Very true.
the opinions that they can express.
yeah, sure. Totally. Yeah, I think that's a thing that will be interesting in thinking about it, right? And what the outputs are. And Jay, the question that I was going to ask before, I'm curious, like, anytime you get into something that's litigious, right? Like, it could be 2 years, 4 years, who knows? Maybe it will be expedited, and like this time next year, maybe there will be some kind of like outcome, but like, who knows? It could be like big news right now and just never
Right.
happen.
For sure.
What do you have any thoughts around that?
Well, I think they can hold it up as long as they want to. I mean,
Yeah. Oh, you
I'm
think that much?
thinking,
You think that much?
yeah, I think that's gonna. I think that's gonna at least be a year. It's gonna get held up. So we'd be looking at sometime 2026. If they look at that 9-month period, that this might
Yeah.
actually happen. But
All right. Well, I mean, we will see how it goes. It sounds like we'll see what happens with TikTok about the same time we get new tax legislation. That's what it sounds like.
Exactly.
Speaking of new tax related stuff, I saw that this week the IRS issued a draft version, or at least I saw it. Maybe it's older than that, but I saw this week they have a new 1099 form, the 1099 DA form, which is super exciting, but also terrifying. Introducing new 1099s is a hot mess. Jay, what do you think about the 1099 DA?
Do we think it's
It's a
actually gonna?
softball for you, Jay.
Right. Do we actually think this is gonna happen? I mean, we've had all these changes teed up on the 1099s. What is it now? 5 years that we're going to actually implement it
Yeah.
and lower the threshold and make everybody have to file 1099s. It was supposed to get implemented a few years ago, and then after COVID, they said, "Well, let's give a little bit of more time on that." And then they said, "Let's go out 2 more
Right.
years because it's really confusing and it's confusing people." But no, you're confusing everybody by extending the deadlines for getting this thing implemented. So if you're going to do it, do it. And let's not worry about the confusion, because all that's happening is we're confusing everybody. But do we really need another form?
I kind of don't think so, because it seems like it'd be pretty similar to the 1099 that you get from your brokerage company, because you have gains and losses on your assets. Because this 1099 form, the DA stands for digital asset. And so basically you're reporting your gains and losses on your digital assets, which is basically the same exact thing as your gains and losses on stock.
All right, so are we looking at this strictly for crypto and
NFTs?
Yeah, right. Yeah, like all of that stuff. I think so, but I don't know. I haven't looked into it to know whether the IRS has really defined digital assets in this space. If crypto even falls into the category of digital assets, and it's just it's just your like monkeys or whatever, like whoever whatever thing you buy, right? Who knows? And digital assets, I think, especially as the like horizon of digital assets continues to expand, where there's more and more different kinds of them, like where your AI is now creating music for you that becomes a digital asset. Like, is this where you're going to be recording like gains, like your royalties on a digital asset that's got 1 million listens on Spotify or something? Like what all goes there? It'll be interesting to see how the IRS defines digital assets, and then kind of what happens from there if the form becomes a burden, or really who's supposed to fill it out, right? Is this Coinbase who has to fill it out, or is this like a Spotify in a weird situation, right? Like, are they the ones? Is this OpenSea or whatever, whoever, like the people you can buy
it gets set up for a specific purpose that the platforms, let's say Coinbase, can actually create it for you. And and
let's hope so.
And hopefully it'll operate a lot like the 4797, the capital gains, where you can actually.
Is that what those are called?
Yeah, we take the stock transactions and we could actually send copies of the transactions and summarize those.
Oh yeah, that would be so much more powerful than a very broad record, just unknown into space time. Because I know there's nothing more exciting to a tax professional than finding out that a client has day traded in crypto. Like that's I'm not sure you could draw up something that causes more frustration. outside of do you have time for a quick question?
That reminds me of something I heard yesterday. A business owner was talking about how he doesn't need accounting help. He's got it all covered, and he throws out there, well, I got an easy tax return. I'm like, yeah, I ain't touching it. Those easy tax returns always end up as your problem child.
Yeah, so that's right, absolutely. One other thing that I saw that Kristy, you mentioned to me yesterday, and then I saw a little bit more today as I was getting prepared. It sounds like QuickBooks or Intuit's doing some new stuff. Do you want to talk about that, Kristy?
Yeah, Intuit is threading a very interesting needle right now. So, as you know, if you're in QuickBooks Online, there's all sorts of additional services you can sign up for through Intuit. They have a checking account now. You can sign up for payroll services. They even have live bookkeeping where you can pay someone on their staff to do all of your bookkeeping for you. Of course, exclusions apply, et cetera, et cetera. That said, starting on Monday, a lot of QuickBooks Online customers are going to start seeing a new tab inside of QuickBooks for something called QuickBooks Live Expert Assisted. And essentially what this is supposed to do is it is supposed to be a non-invasive accounting support on-demand tool for folks who DIY, let's say. So think about, maybe you have a transaction and you're not sure how to code it. You could potentially, for a small fee, hit this button and call up one of Intuit's bookkeepers and say, hey, how do I code this? They've made some promises about what this is not. And so, of course, accountants are very up in arms about this, and it feels a little bit shaky. And what does this mean for our own firms, et cetera, going forward? But they're promising that it's not a way for clients to get advice or for folks to these experts don't have access to the books. They would have to remote in sort of over your shoulder. Think of like a screen share, and they wouldn't be able to actually physically touch anything in your books. They would just be kind of guiding you. So this might be helpful for something like maybe you're not sure where to go to reconcile. Well, they could walk you through that, but I don't see how that's any different than the QuickBooks Online support that's already being offered for free. This particular service would cost their customers $50 a month additional. That would be tacked onto their monthly subscription bill for QuickBooks Online. And so it'll be really interesting to see how this plays out, because a lot of what they say they're going to do, like they could tell you how to code a transaction. I don't see how that's not advice, which is something that they say they're not going to do. And really the only other things they could help with that wouldn't be some sort of advice piece would be tech support. Here's how to hook up your bank feed. Yeah. Here's how to create an invoice. Right now, anyone can hit that question mark button in QuickBooks Online and get that advice for free. So it'll be interesting to see what happens here and how this pans out in practice in real life. My feeling is that it is going to turn into some pseudo advice that may or may not be what your actual accountant would want you to be doing, and could potentially result in you paying your accountant more money to fix something that maybe shouldn't have been messed with in the first place. So beware, buyer beware, Be careful. It's coming though. You'll see it on Monday. It'll start showing up and they're rolling it out piecemeal.
So how I was just going to say, a few years ago, they launched live bookkeeping with the promise of, hey, accounting partners, you will never see this. We will not pitch your clients, and you are safe. So their claims don't really hold water.
This time they have full on said they're going to advertise it to everybody, whether that person is connected to an accountant or not, which gave a lot of us in the industry and those of us that have worked very closely with Intuit for a long time quite a bit of pause, because that feels like competition instead of complementary. They did their best on a call with Pro Advisors to try to convince a lot of accountants yesterday that they are not trying to poach clients, that they are trying to complement and be sort of like an overflow. There is a talent shortage in the industry, and so they're, I think, trying to thread that needle of, we have some lower level clients who maybe don't pay a ton for your services, and we could answer these quick questions for you. Just we'll do the basic stuff. You can keep doing the advice. But again, based on what I'm seeing and what I'm hearing, I don't know why you would A, pay for this if you just need the support, and B, how this doesn't turn into undermining maybe a strategy or a certain way of accounting that's being done for a very specific purpose that this who knows how qualified bookkeeper that they've hired could advise on.
Well, and I was thinking about this earlier when we were talking about TikTok. Maybe Intuit's looking to buy TikTok and use that for tax advice. You get a G-Web.
Maybe. I mean, there's already a whole niche of people saying they're accountants on TikTok. So
there you go.
There's all sorts of things flying around that may not be true and correct.
Maybe they need some additional income.
Yeah, I don't know. But it remains to be seen.
I was just going to ask, Kristy, I'm sorry. I was going to ask, how is this different than the assisted bookkeeping that's out there right now that's also $50 a month?
So the assisted bookkeeping, it's actually a range. It starts at $50 a month. But that is actual real bookkeeping. Like, you are hiring a live bookkeeper through Intuit. You are paying them a monthly fee. They are coding your transactions. They are reconciling. They are giving you reports. So very basic write-up type bookkeeping done in QuickBooks Online. This has been out for several years, and by and large, the feedback that I've received from clients who have used it in the past, as well as fellow accountants who have been live bookkeepers, is it's not great. A lot of us have received pretty lucrative cleanup jobs from these live bookkeepers that maybe didn't understand what they were doing and set the books up wrong, or were doing the coding all wrong. And then, a tax preparer goes to do a tax return and none of it makes any sense and it all has to be redone. So now this person is, you get what you pay for, right? There are certain things these live bookkeepers will not do. So they won't do costing. They won't work with nonprofits. They won't, they have a very kind of narrow scope of who they'll work with. And it's basically very basic professional services that are like sole proprietors, right?
Sure.
They won't even, they tried, I think, at the onset to work with more complex, and they learned very, very quickly that is just not scalable and based on their model. Like they're kind of an in and out kind of bill type operation with it. And some clients don't want all the extra bells and whistles. They just want stuff to be done and ready so they can, look at a P&L or have their stuff ready for their tax return. And they don't care about the strategy behind looking at the numbers and working with a real accountant on something like that. But for the most part, it hasn't been successful. And it sounds like on the worker side, they do a lot of the training is less about how to do accounting and more how to use QuickBooks, which is lovely. But we all know that that's just half the battle in what we do and what a business needs.
Yeah.
So
absolutely. Well, it'll be interesting to see like how much adoption there is, or how many people actually use the tool, and then it'll be also interesting to see, I think, like how competitive that ends up being, because if it's right there in your face, that is significantly different than just another like offering that's maybe in a setting somewhere.
Yeah, I would not be surprised if people start seeing a pop up. They'll get a pop up, and I think it's important for those of us accountants that are concerned whatsoever that our clients might opt into this without having a conversation first. Is you may want to have some proactive communication with your clients.
Yeah, definitely a good thing to do for sure. Last week, the last thing that I've got, at least right now, last week we talked about the KPMG CEO study. This week, Grant Thornton issued one. So you'll find shocking news that Grant Thornton CEOs. Grant Thornton is another big accounting firm, right? So they're the CEOs that they're talking to said a lot of the same things that the KPMG CEO said. There is a lot of interest in generative AI. There's a lot of interest in investments in technology and digital transformation. Like an interesting thing that I saw that I thought was a little unusual, at least, was that the 55% of the CEOs said that in the next year they're going to invest in technology, and then also or separately in digital transformation, cybersecurity, all of that kind of stuff. But the same number, 55%, also said that they were going to do cost optimization. And I was like, wait, we're going to spend more money, but we're also going to save more money. Like this seems very like against each other. So I think it will be interesting to see what the next future years hold. But I thought the thing that I found most interesting out of the summary that I read of this study was that the highest level in 3 years of these CEOs that Grant Thornton had been talking to have optimism about the U.S. economy going forward. And I know that there's been a lot of like concern that the economy overall is getting a little sluggish, that there's a little bit of drawback, that the inflation and everything that's going on out in the economy is causing significant impacts to the appetite, particularly for discretionary stuff. But apparently the Grant Thornton CEOs, they feel as good about it as they have in a while. So that was exciting to see. It's nice to know that there's at least a subset out there that thinks that the future is rosy and bright. So here's hoping those guys are right, or those ladies or those people are correct. So we will see. Obviously, we'll see how that turns over the next 3 years. We'll see how right they are. But it's good to know that at least there's some optimism out there. That's definitely exciting to see.
Well, I want to see the model. I mean, what AI model is going to tell you if you spend more money, you're going to save more money?
Yeah, I'm not sure exactly how that's going to work.
Show me that cash flow forecast.
I know, yeah. I was, I was thinking about that, about buying TikTok actually, because if is there an opportunity for arbitrage here? Like, can I get in as an investor in TikTok and make a bunch of
Right?
money?
Yeah.
That would be pretty swell. I'd love to do that. I have told my wife for a really long time that one of the things that I want to do more than anything else in my life is commit arbitrage. I just cannot wait. One day I'm going to do it. Um, and maybe I am doing it right now on my mortgage,
Maybe.
because mortgage rate's pretty low. I don't have to. If I didn't pay it, I could make more on the investment returns, at least today. So maybe I'm doing it already. Let's go. What Kristy, Jay, what other news happened this week, or Kristy? It's been a little while since we've had you on. What kind of news is out there that you think is worth talking about?
Uh, from a tech perspective, I haven't really been hearing a lot. A lot of folks go head down during tax season, and vendors
Sure.
have learned, and properly so, to leave accountants alone during tax season, because we don't like that, and we do not have
Right.
time. From a tech perspective, I don't really have much for you, my friend. Just the QuickBooks news.
No, that's all right. That's big news, or at least interesting news. Jay, anything
Yes.
we haven't talked about that was interesting this week?
Well, I wasn't sure I would be able to talk about this, but because I learned it yesterday, but got a
Hmm.
email from Zero today, and they're bringing Zero awards back to the U.S.
Ooh, tell me more.
So, starting May 1st, you'll be able to go on Zero.com and you can nominate yourself, nominate a peer, nominate me, because Lord knows I want another Zero award. So, so yeah, it's pretty awesome. They have these different categories, and I'll pull all that up and we'll talk about that next week. But
All right.
it's pretty cool. They're gonna award the winners at ZeroCon, and it should be fun. You know,
Yeah, that sounds like fun. When's ZeroCon this year, Jay?
ZeroCon is in August in Nashville, and
All
I
right.
can't
So
It's a
wait to
fun
get to
place.
the expo hall and see
Oh,
all
yeah.
those software vendors in there.
Let's go. Maybe by then we'll have loads and loads of new stories to talk about, Kristy. New tech coming out that we'll hopefully see.
Definitely.
Uh, when does conference season start? I assume it's like not now, but
It's
I have
about
no
to start.
idea.
It's
Is
Yeah,
it about to start?
accounting conference season starts like June 1st.
Okay.
Yeah.
Yeah, so maybe over the next month or so we'll have some good tech updates, Kristy, as people start to get ready for these
Oh, for
conferences,
sure.
start to like try to put the bells and whistles on so that they can snaz everybody at the at the accounting conferences starting in June.
Well, quick
That'll be
quick
fun.
plug while we're here. Let's talk about a
Yeah,
conference coming up in June, where our very own
Mhm.
Christy
yeah,
will be presenting on migrating to Zero the easy way.
yeah.
I
As will Jay.
I huh?
I said, as will Jay. We are co-presenting, my friend.
Well, so I might be doing it with a beverage in my hand because I realized it's on Father's Day.
Oh, is that
Oh,
right?
We're
okay.
presenting on Sunday, mid afternoon. Yeah.
Wow.
So
How
yeah,
funny.
Interesting. I didn't realize that was Father's Day. That was kind
yeah,
of a poor planning.
yeah, for
Um,
sure.
But
They
so
that'll
always,
be
yeah, maybe
fun.
I
by the
will.
way, they
Yeah.
always do it on Father's Day. They always start their conference on Father's Day. Very bad planning,
Is
Wow.
that to
but
get everybody out of the house? To get, maybe it's ladies' night the first night or something. Maybe that's the
maybe.
move.
But
Maybe.
yeah, and so we're gonna co-present that, and I have a couple sessions I am doing on Zero Inventory Plus. So looking forward to doing that as well. So that's gonna kick off conference season pretty well.
Yeah, that's exciting. We'll look forward to getting more details about that as we get a little closer. But definitely super exciting. Glad that my teammates get to do that kind of fun stuff. That's super fun for me. All right, so it's Thursday today, so it's not really like have a beverage in the hand type of day. But Jay, did you set anything up? It's almost 5 o'clock over there, right?
Yeah, I'm actually heading out of here when we're done to go meet some buddies for
Yeah,
coffee. So I'm not drinking. I drank enough in the
right
last
move.
3 days to cover the next 2 months. So
There you go. Feels feels about right. Feels about right. Wednesday night is my bowling night, so I totally understand that.
yeah,
I am just drinking water today, regular old. My grandfather called it Adam's ale, but so just water for me, Kristy. I saw that you shared it. What was it?
Oh, it's just it's a Dunkin' Donuts K-Pod, and it's cold as heck because it's from this morning. But it's what I got left over for
Gross.
coffee.
I
I
do.
know
Yeah.
it's
I
so
do
delicious.
like the
This
Pluto's
is how
mug
my
though.
yeah. This is anytime I can get merch or swag from vendors, I do. I don't know if you can see it very well. I
Yeah.
feel like I had to put my hand
Right.
behind it,
Oh yeah.
like influencers
Yeah.
do on TikTok.
Other way.
I'm going the wrong direction.
Yeah.
There we go.
Yeah. You got
Yeah,
it.
Pluto
Yeah.
is a bill pay vendor that works internationally, so very popular in
Awesome.
the Canada space, Canadian
And
space.
that actually is a very good coffee mug because I have one myself. I like it a lot.
Yes.
Yeah, you guys are so fancy. I need to talk to people and get like sweet mugs or something, I guess. I will put it on the podcast. uh, sorry. Now that we talked about all of
All
those
about
things, we were
working
talking
those
about the
vendor
news.
booths, Chris.
Yeah, there you go. So it's conference season. Let's go. I'm gonna have to go find. I'm gonna have to find some to get to, so that I can find some good stuff, scarf to wear or something. I don't know. I'll figure it out. But now that we've talked about the news, let's get into the main topics of this week. Here at High Rock, over the past few weeks, we've been revisiting our scorecard metrics, and it's been an exciting adventure through both what our firm leadership care about and also our team care about. And so, some things that I personally have found really interesting about this has been like what metrics matter to people, like specifically to our team and the people in our team. How easy it is to get, how easy or difficult really it is to get the information that can support some of those the information that people would have interest in, and then also just kind of basically understanding which metrics really matter. So with that like thought of and that baseline, like that's what we're going to talk about today. So I want to start by like identifying, like how do you identify the best metrics for you for your company, like who should you start with? Who should you talk to? Like how should that work? Jay, you got any thoughts on that?
Yeah, I think you really start with what's out there in the ether. What is everybody tracking? Start there. It gives you a good level set, and then from there, you can start nailing that down to what you actually need. There are like a base set of metrics, like we talked about financial statement
loads of
metrics.
KPIs.
Everybody's looking at those specifics. Whether it's your quick ratio or your current ratio, things like that. So
Sure.
what are the basics, and then start looking deeper and take a deeper look within your company and what you actually need to track. See what you are tracking.
Yeah.
Because if you're not tracking it, you can't measure it.
That's exactly right, and that becomes like so important too. That's the whole point of being able to track metrics is to identify problems, identify opportunities, like all of the things that go along with that. That's the reason that you're using metrics in the first place. And so it is so important to identify the things that are running or supporting your business. That's you have to do that so that you can make good decisions, right? That's really what metrics are come down to. They're decision making tools, so that you can identify where you'd like to move, or where you'd like to go, or anything like that, right? So Jay, as you think about I don't know, as you think about an accounting firm, what what do you what are like some typical metrics that you see, right? Or like what kind of metrics are we talking about here?
Well, there are some financial metrics that we look at, like,
Sure.
monthly recurring revenue and,
Yeah.
client acquisition cost. And we look at the average revenue rate, things like that. And,
Yeah.
each of those have a efficiency component to them. So looking at
Right.
efficiency and capacity are very important as well, and they fit into those things.
Yeah.
And the more efficient you are, the higher your average revenue rate's going to be, because it's taking you less time
Right.
to do it based on your monthly fee that you're collecting. So
That's exactly right.
that's why we not only yes, we all track time. Well, we don't track time because Ron Baker says not to, but we do because we need to know where we have these problems. Whether we're having scope creep or poor efficiency and things
Yeah.
like that. So
Yeah, and I think there's a few different things that you can think about too, because like maybe in a single individual firm, like tracking time isn't quite as valuable, because there's only the one of you, and you know what your revenue streams are. But I think even then, like having a good baseline for like how much time am I spending on this particular job, can be really powerful in decision making. So
yeah,
so again, that's what it all comes down to. It's not I don't think of time tracking as and we certainly don't do it this way. It's not as a revenue driver.
right,
It's much more as uh, a decision, a piece of information to help make decisions. So whatever you would call that. Um, and I think that a lot of the things that you talked about, Jay, are extremely important to e-commerce businesses too,
mm-hmm.
right? So it's not so much monthly recurring revenue, but if you don't know what your like daily sales are, like
Right.
which is basically recurring revenue, like if you don't have a good handle on how much you're selling every day, like you don't have anything. And if you don't know how much it takes, you mentioned client acquisition costs, right? If you don't have that, like you're going to have a lot of trouble in understanding how effective your advertising is and what decisions you need to make in your advertising, and then the utilization or capacity, like in an e-commerce business, that's extremely important as well. And so I think there are a lot of parallels between like maybe they don't go by the exact same names, but it's the same type of stuff. They are measures of efficiency and measures of potential cash flow, right? Because you're also going to look at any business is going to look at margin, right? Because you're going to want to know how much it's costing you to generate that revenue from like the components that go into that, right? And for an accounting firm, that's like people. And then that's another reason why allocating time and can be really important, because you do need to know which clients that you're working with are valuable and which ones are not, so that you do understand the value that you're providing, and the value that those clients are providing to you. And so I do think that I do think that there are really a lot of very similar metrics between professional services entities like accounting firms and e-commerce entities. Certainly.
You said something earlier
Go ahead, Jake.
about a single member firm. It might not be that important to track your time, but when you're looking at your average hourly rate, it is more important. Because, I mean, if you're spending so much time of your day working on these clients, and then you figure out, basically you're making $25 to $30 an hour, you might be better off working a corporate job at that point. There's a lot of things to look at there. There might be some freedoms involved there, but there are a lot of thoughts there going to that.
Right, and I don't disagree with you, and I think that and I think that what a lot of people probably do, this is kind of my thought on this, is that that person, rather than consider like doing the math of the hourly, is just doing that on a napkin. Yeah. So rather than like actually recording it, they're like, I got to spend enough time with my family. I'm comfortable with that. I need this much money to live. Like you're doing a very rough version of that, even if you're not like keeping of like in record. And I will say, like, and I'm the worst offender about this, like, time records on their own are like, kind of arbitrary. Like, they're mostly right, and if somebody is extremely like consistent about doing them and doing them timely, like, you're going to get a lot better data. But at the same time, like, it is really difficult to do that, and it either takes a lot of time or a lot of effort, because at least as far as I found, there doesn't exist yet a very good automation tool to listen to what you're doing that day, or to know by your keystrokes or whatever, you're definitely talking to Jay right now about creating content, right? Like, that is, which is a thing that you would want to know. And without building out your own like individual process, like your data is going to be like loose at best, right? It's not going to be perfect. And I think that that's the thing that you really need to recognize, right? Is when it comes to decision making, you actually don't need perfect data, but you need like good data, right? You need like relatively accurate data. You need to have an idea that the information that you're using is right. And that actually brings up the next point of like, how can you pull information, or how can you identify the right things to review. And so, Jay, I know you mentioned look at your competitors. What are they looking at? Look at public companies that are similar to yours, and understand what kind of metrics their management's using. Talk to your other peers, or maybe even your accounting advisor, right? They're going to be a good person who's going to be able to give you some insight into things that matter to your business. But I think another really good how is what you described before too, Jay, of like, think about the business that you're running. What are you already looking at all of the time? Mm-hmm. What truly matters to you regularly? Like, what is an important piece of information? Kristy, as you think about accounting firms, are there like ideas that you would have on how to consider the best metrics, or even how to determine the best way to get data?
Yeah, so I always like to go look at the industry itself. A lot of times what's important to one industry isn't important to another. And so looking to see what your peers in the same industry are tracking and measuring. Looking at maybe a level or two above you. If you are a small firm and you're hoping to be a mid-sized firm, finding a couple of mid-sized firms to look at to see what they're tracking, what's important to them, to start to get an idea of where you're going to need to shoot to in order to continue to grow and scale. Yeah. Right. So that's what I tend to advise my clients when we're trying to determine what do we want to track and measure. It's what's important. First of all, where's the heartburn at? What is the frustrating part? If cash flow is poor, well, what are the levers to control cash flow, and how can we measure those, and how can we look at them on a weekly basis? And start with what's most important. And then as time proceeds and as you get more and more familiar with your client, you'll start to come up with, we definitely need to track this thing because in a year, the goal is to do this. Right. So I like it to be a little bit goal-based as well.
No, and I think that that's a really, really, really good way to view them, right? Because if you're making decisions, your intention is to make those decisions toward something, right? And so if you don't have a goal in mind, or like a place that you're trying to get to, then what was the point of the decision, right? And so I think like aligning your goals to, or aligning the metrics that you're evaluating to the goals that you have for your business, like they're like, you shouldn't do it any other way. Like that is the most accurate way to do it. And I do think that also.
No, I was just going to say the goal could simply be like, we want to get a loan from our bank. Like that can be a goal, right? And then you're going to focus on those KPIs that focus on the health of your company in order to obtain that thing. It doesn't necessarily have to be, a certain company-wide metric where you're trying to shoot for some sort of sale or some sort of revenue level. It could just be, I want to have a healthy business.
Yeah, right. And so one other thing that I think that that you'll be well suited to answer is like when you think about getting data and building these metrics or identifying what these metrics are, or really like getting the underlying information. Like who do you think should be doing that? Like who would be a good person to help you to evaluate that?
To help you decide what to measure?
Both that, or also like to help you to get the information itself, right? Like, so if you're looking
Oh,
for a
like
specific,
for
yeah,
tracking.
yeah,
Okay.
right, to
So,
help you
I mean,
get the thing that you
your
want to track.
accountant, yeah. So your accountant is always a great place to start. Usually we
Right.
have laundry lists of KPIs at our disposal, depending on what the goals are, what the need is, right? And then it becomes an exercise in brainstorming the best way to capture the data with the easiest amount of lift and the least amount of cost, right? So, for instance,
Right.
if one of your metrics is, let's say it's utilization, and you're not already tracking your time, well, what's the cheapest and easiest way to start tracking our time that will not break the bank, that will get buy-in by my team, right? And
Right.
not make a huge administrative burden on those folks that they're not used to and
Yeah.
might, be upset about that would, require a lot of analysis. And then from there, does the information from the app or whatever we've employed, is that what we actually need in order to calculate the metric? Or am I now having to dump something into Excel and massage numbers and spend 3 hours to get the result? And
Yeah.
so
Right.
you sometimes have to get a little bit creative and think outside the box, depending on what that metric is. Some of them are straightforward, and it's just a matter of dividing one number by another number on the balance sheet, right? But
Sure.
sometimes depending on the need, you might have to get a little bit creative and get buy-in from everyone around you. If it's just you, that's
Right.
an easy thing to do. When I was on my own, if I wanted to try a new app or measure something, I just had to convince myself, which was pretty darn easy. But once
Sure.
you've got a team and you've got different folks working on different things with varying amounts of free time to put some numbers in a scorecard, it becomes a little bit more difficult to convince them of the need.
Right.
Now
Yeah.
that is so true.
And right. Absolutely. So Jay, like, how do you overcome that?
Well, make it easy to collect these things first of all, and try to build
Yeah.
a report as automated as you can. Like
Mhm.
I've been pulled away from what I was working on, and what I want to go back to is our time tracking software, along with building capacities and actually being able to pull that out through a BI tool, Power BI actually, and be able to review that
Yeah.
and be able to review it from every level looking down, whether it's across the entire team, across our industry teams, across client, and be able to see what we're actually spending our time on. And are we if we scope them properly, are we priced correctly? All of that gets
Right.
played out in that model. The other side of that is, and I was actually looking for a report. There's actually benchmark reports for every industry that are out there, and it tells you important things, and these are other ways to get metrics that you want to track. Like,
Yeah. Sure.
like I'm looking at this one right now. It's profit per partner, revenue per partner, uh, hours, average hourly rate, worked on client hours. So they're breaking it all down, and
Yeah. Right.
you do that across the different teams and things like that. And
Yeah.
some of that is relatively easy. Some of it's sitting in the financials. You might need to use this other report that I'm working on to pull some of that data out to get some other metrics.
Yeah.
You want to build it off of each other and utilize what you have. So you're
Right.
not having to have people. And that, to me, when I started at HRA and having to do that, it's like, I need you every week to report these numbers. I'm like, okay.
Yeah.
Where do we
Right.
pull them from? And it's
That's
like,
right.
so
Well, and that's an important decision that you have to make
Right.
is where like determining where you're going to get the data, right? Like which is the source of truth, or which is the source of like
Right.
what gives you the most optimal answer. And
And
so you've talked about a variety of different things, right? It could come from the accounting system. You could have to implement a new tool, like Kristy talked about. Like
yeah.
maybe you need a new thing. What else were you going to talk about there, Jake?
Well, I was going to say, it doesn't matter which source you pull it from, as long as you're consistent.
Right. And
Um,
that becomes like extremely important, right? Because if you're evaluating a metric, it's important that you're pulling it from the same spot every time,
right.
because there may be, and this actually happened in one of the gross margin analyses that I was looking at for us, right? It may be that one report that's prepared by one person out of one system uses different inputs,
Right.
and then if you're using those inputs versus like a different set of inputs, now you have a different result, and that result may cloud where you're trying to go. And
Exactly.
so if like sometime you're using one and sometime you're using another, like you're going to cause yourself problems. And so it is really important when you talk about data and you talk about analyzing data, that you understand where it's coming from and that you're consistent in pulling it from the same place. Like that does become extremely important. One other thing that I think is extremely important is how frequently you pull that data, or how frequently you look at this information. Because as an auditor, like I was very, very familiar with looking at like old stuff, right? Like everything that I looked at had already happened a long time ago, oftentimes several months ago. And so if you're looking at information several months in arrears, like you're not going to be able to make good and powerful decisions to meet your goals. If that's the only time that data is available, like I guess that's the best that you can do. But how frequently should you be considering, like how frequently should you be considering what reports you can get, and what information is out there?
Well, we talked a little bit about this last week, not you and I, but as a group. Some of this information is
Yep.
only available once a month anyway. But
Right.
when you're looking at a retail establishment or an e-commerce store, you can be pulling analytics down to the hour.
Yeah.
So you could be looking at it on it. I mean, I think looking at it hourly is overkill, but I
Right.
know I worked for a couple of healthcare entities that every morning they had to send in what they called a flash report, and there was specific metrics about butts in bed, and number of people, staffing issues, food cost, and they were looking at that on a daily basis. I still think that probably could have been weekly as well, but
Sure.
um, we ended up going from those flash reports on a daily basis to producing a weekly P&L, which was
Yeah.
which started out in Excel, which was kind of automated towards the end when I left there.
Yeah.
But
Right.
a lot of it just depends on your industry.
Yeah, no, I think that's the important takeaway. Actually, is that how frequently do you need the information? Well,
Yeah.
how frequently do you need to make critical decisions?
Right.
And whatever the frequency that is, or whatever, like what your vision period is, right? Like if you need to be able to understand it in a time frame that makes sense for what you're trying to achieve. And so that becomes really important. And I know in EOS, which is part of the reason why we're working on scorecarding, is cleaning up that process for ourselves. In EOS, it's supposed to be a weekly, right? Like you're putting together metrics for a weekly conversation with your team, or your sets of teams. And so doing that and doing it weekly, I think is like pretty manageable, because but it does become important, and it does highlight the need for understanding how to get that information efficiently. Because if you're doing something every week, and Kristy, it's a report like you're talking about, like you talked about before, where you have to pull the information, manipulate it, and it takes you 3 hours to prepare one number. Like, that's not going to be something you're going to want to do every week. It's just not going to be the most valuable use of your time. And so it becomes really important to think about all of the different factors associated with this, so that you are making the right decision on both what you're pulling, who you're pulling it from, how you're taking that data, what pieces of data really matter, and then how frequently that you're doing it. Now we've talked, as we've been talking here, we've talked about a lot of potential like issues that you can run into, and I think the timeliness issue is a like pretty relevant one, right? Like sometimes the data just isn't available as fast as you'd like, and so that just needs to be a thing that you manage as you're working through that process, or you find a way to streamline the process, right? You implement a new technology that helps you to do it more efficiently. You identify a person who has a better set of skills in identifying that data or working through that data, right? There are lots of ways to assist with timeliness if the metric is that important. What other potential problems can you run into when you're evaluating metrics that are driving your business?
Well, I think incomplete data is just as bad as bad timeliness with data.
Or garbage in, garbage out.
Right,
worse.
exactly.
Yeah.
And in some metrics, you're going to review them, and you might need other factors at play. Let's say you run a retail location, and you're tracking the number of visits every hour of the day, and you're looking at you look at it on a daily basis, and you track the number of visitors, and so maybe you need to be tracking the weather as well, because maybe it's the middle of the summer and everybody's going to the beach, or it's the middle of winter, you had a snowstorm, or it's raining, or things like that. It all plays into all of that, and you have to know why you're having the outlier numbers. And sometimes you need
right. So it's like about digging deeper into what is actually the piece that changes this, and you may think you know what that is, but maybe you need to dig even deeper.
Right. And then maybe what you need to do is compare all the rainy days against themselves and the sunny days against themselves, and get better comparisons, and see how you're stacking up, and then go down deeper and ask why. Why is this happening on these days?
Right, and that's how you end up making decisions too.
Yeah.
Another problem. Go ahead, Kristy, tell us more.
Yeah, I think another problem you can run into is you become so hyper-focused on those numbers that you kind of miss the forest for the trees. So you stop looking at your business holistically to, keep an eye out for problems that may be on the horizon, or, things that might be non-financial that need to be measured, right? And you become, it's almost like, schools started teaching kids how to take tests instead of educating them, right? Because the funding was tied to how the test scores turned out. So, some schools kind of rebuffed that and continued to teach kids, and some schools needed the funding. And so they had no choice. So I think it's important that you understand what is driving the decisions, and not lose sight of the bigger picture.
Yeah, and I think that is always really important, right? Because you may have thought that this metric mattered to you, but once you're now like evaluating every week, it's either the same all of the time, or it's not really telling you anything, because maybe you are missing a piece of it, or it's just not as helpful as you wanted for it to be originally. And so I do think that it's really important to stay flexible when you're evaluating metrics, especially if you're in the process of developing them in the first place, because it may not be what you expected for it to be. And then we talked about it. I mean, I think by far the most critical thing is making sure that whatever it is that you're evaluating, that it's accurate. And so you you have to understand and validate what it is. And Kristy, you mentioned like sometimes you don't need like financial metrics. Like sometimes the thing
Right.
that's important to you has nothing to do with finances at all. And so you definitely want to. I think anyway, you should like give yourself some time to think outside of the box on how you can get information. One thing that we're like considering doing, right, is evaluating how our teammates feel, right? Like or our clients feel, like both of those things. Like that data isn't something you're going to go to the financial statements to find. Like you're not going to find client satisfaction in your financials anywhere, and you're not going to find
Right.
like employee satisfaction. Like it just doesn't exist that way. And so you may have to create a process to get something that becomes really relevant, because it is extremely important to the business overall. But it doesn't just come out of revenue or costs, right? It's something completely different. And it is and it could, it could be like 5-star reviews on Amazon or something. Like there's like a million different things that might matter. Or like to like circle back to our conversation before, it's like impressions on TikTok, right? Like that may be a very, very important thing to you, but that isn't, that's not going to come out of your financial data, but it probably will impact it. And it is almost certainly, if you're using that platform in any kind of way to send people to a shop or to promote your product, like they're going to be correlated. And that also means that there's like a lot of underlying information there that can be wrong. And so that's why it becomes so important to validate your data, because your Shopify platform may tell you it came from XYZ place, and your TikTok shop information may say something different. And so, like we talked about before, it becomes really important to understand what those things are actually telling you, like what they actually mean, what period they're covering, like all of that kind of stuff. And then using the same thing every time, right? Because the easiest way to be inaccurate is to use one thing one time and something else the next time, and then just like flip back and forth for whatever reason. What other potential problems can you run into when you're evaluating metrics?
Well, I just want to add in what you all were saying earlier, and unfortunately, Kelly jumped in here and she's all over me. So she's been distracting me here for a minute, trying to keep her from eating stuff in my office. But everybody's like, "Well, my financials tell the whole story." Well, they do tell the whole story, but they don't tell the whole. They don't tell the detailed story. They will give you indicators, but they are very reactive. And so you look at revenue or revenue per client, and you normalize the data, because you might be looking at sales and comparing 30, 31, 20, 28 days. We have variations there. When you break it down and normalize it, you're looking at apples to apples, and you're also looking at reactive data, historical data, but you can look at it from a different perspective, and you could probably see the indicators either up or down from them before you will see it in the revenue as well.
Yeah,
so,
absolutely.
Even like though you're looking at historical information, it's still a way of being proactive. It's kind of where I'm going.
Yeah, absolutely. And I think that's absolutely true. I mean, there's no question that for an e-commerce business, your social engagement is going to be a leading indicator. Like it's historical, right? That's how many people interacted with your website or interacted with your YouTube channel or whatever it might be, right? That's historical information, but it's going to tell you what's going to happen pretty soon with your sales volume,
right?
And maybe even like immediately. So, like there's no question that being open to considering non-financial data is extremely important in monitoring metrics for for any kind of business, and then particularly for any business that focuses on people, be that like a professional services business like an accounting firm. There's definitely data that matters that's not financial data. Because even timekeeping, right? That's not financial data, right?
Right.
That
Exactly.
is it's numbers, but it's not financial data. And so they're and then the same is true of e-commerce entities, right? Like that, sure, there's an underlying product there, but a lot of the things that go along with that aren't non-financial. Like there's a lot of ways to stimulate your business that have nothing to do with direct numbers in your financial reporting. Um, what other thoughts do you have, Jay? Do you have anything, any parting thoughts for a conversation on metrics?
So, if I was running an e-commerce business today, the number one
Yep.
metric I would be looking at is cart abandonment,
Oh yeah. Okay.
because
It's
that's
a good
going to
one.
lead to a lot of questions. Is my competition
Non-financial
going
too.
up? Or people just
Yeah.
shopping me? Things like that. And you know, there are apps. And I know the Shopify's got dozens of apps that target cart abandonment, but
Yeah.
ultimately you want to get that sale done. You also, the other one I would look at is average order value and doing upsells. But
Yeah.
uh,
Right.
I would look at both of those, and if you have the tools, I would actually email those people that have declined.
Bannekerk.
Yeah, who have abandoned their
Yeah.
cart and who declined the upsell offer, to find out why. And and that's what these things do. By measuring it, we could dig deeper and find out what's actually going on in our business. It might be that somebody went and saw it, and then a shopping app popped up. They have the little Chrome
Sure.
extensions, and it says, "Hey, this item's cheaper on this site." And they
Yeah.
might have drug you over there to get it, or something along those lines. And
Right.
this gives you intel that you need to act on in your business. Maybe
Right.
Kristy is selling the same widget that I am for 10% less than I am. I need to know that.
Yeah. You
Or
do absolutely. It's
or
extremely important.
or Kristy shipping it for free and I'm charging $20 for shipping.
Right.
Right.
There's all kinds of reasons
There's a
that could
lot
be the
of things to
case.
be
Um,
evaluated.
Right, and then there are some opportunities there too, because in a really effective like abandoned cart flow, be that an email flow or an SMS flow, like in a really effective one, you may offer a small discount and close the sale, and not spend very much on that email marketing, um, to also increase your revenue. Like you have a lot of different things that you can do there. Is hey, we saw you looking at this. It's selling really fast. Are you sure you don't want it? Here's 10% off.
Right.
Um, or like you're talking about, Jay, like, hey, we saw that you were looking at this and you didn't purchase it. Like, what happened? Tell us more. Take this survey for a chance at a $50 gift card or something.
Right.
Who knows, right? Like there's
Exactly.
there the information that comes out of that can be extremely important, either through like literal sales volume or from the data that comes from it. Like I think that that's absolutely true, and those metrics are average order value, cart abandonment rate, and then one more that I would add is like the acquisition costs, right? The cost, the customer acquisition cost. Like
For
how much
sure.
does it take you to bring in someone new? Like those three to me are if you know those and you know where you're heading with those, you probably need to know cash flow numbers just to be able to make sure like you're generating cash flow. But past that, like you're gonna have a really good understanding about your business.
Yep.
Kristy, do you have any final thoughts related to metricing and what we've talked about here today?
I don't. I appreciate being able to take part in the conversation. And all I would just say is, make sure you're measuring what's actually important and not just doing it because you
Yeah.
think you have to.
And I think that that's a fundamentally wonderful place to end and round this conversation out. Is metrics are only important. Metrics only matter if they're important to you and if they're driving you forward, right? And so if you're following your top line revenue but you don't do anything about it, like it's valueless. And so it is really important to to make sure that the metrics that you're utilizing are sending you and your business in the direction that you want to go. That's a wonderful place to end. So I love that, Kristy. Thank you for bringing that up and reminding us all of how important that is. So again, obviously today it's Thursday instead of Friday, and that's because I am going out of town this weekend. I am going with my wife and our little one. We're going to go celebrate a party down in Galveston for one of my wife's cousins. So we're going to Galveston. So those are our weekend plans. That'll be a really long drive. We're taking the dogs with us. So Jay, I have a question for you actually. So from the DFW area where we are now to drive to Galveston takes 6 hours.
Okay.
How far could you get from like Miami in 6 hours time?
Miami to Jacksonville.
Yeah, I mean, that seems like a really long way. Texas is so big.
It's 4 hours from my house to Miami. Not to
you're in Central Florida?
I'm in Orlando,
Yeah.
So,
yeah, that's
4 hours away.
So that's gonna be exciting. Can't wait to drive a lot. Love doing that. But it'll be a joy to hopefully to maybe go back to the beaches. It'll be a little warmer this time than when we went last time. So baby might enjoy some time on the beach, and then I will never be unhappy spending time with family, even if it's my wife's family. They're wonderful. So really looking forward to it, and it'll be nice to just be away for a little bit. Jay, what you got going on this weekend?
Well, I am looking at the weather forecast right now, and the high. The next 10 days, we're looking at sunshine every day, with one day in the upper 80s, or mid 80s. So I have a feeling the top's coming off the
I can handle
Saturday morning. And
there you go. How are you gonna handle that wonderful?
How am I gonna handle that? Very easily.
Yeah, how are you gonna handle that wonderful situation? How tough, Jay?
Oh yeah,
tough struggle there.
But we are 3 weeks from graduation, so we have a graduation party coming here the day after the Saturday of Memorial Day weekend. So preparations around here, that honeydew list has started, so I got to get some things done around here, and get some things done. And,
that'll be hopefully they're outside at least, so you can enjoy the awesome weather.
Yeah, there's a lot of things in the yard to get.
Probably not though.
Yeah.
Oh, that's good. That's good. Yeah. Good. Kristy, any exciting weekend plans? Oh, sorry, Jay.
The weather's not looking very promising here in Seattle, so I was hoping to get to go out and play in the dirt a little bit with my garden, but I'm thinking I'm probably going to have to wait till Mother's Day or so to get my plants in the ground and start, getting my beans going and all of that good stuff. So probably just doing some, spring cleaning and chores around this place. Maybe I'll find a fun show to binge watch.
There you go. That'll be fun. That'll be fun. Any Jay? Any big things expected over the next week? Do we have anything? Any exciting stuff coming up? Any thing worth talking about?
We kind of.
There's NASCAR this week.
I was just gonna say we kind of glanced over NASCAR this week, and they were at Talladega last week, and.
Oh yeah, okay.
I don't know if you got to see any of that, but it was quite.
I did not.
It ended with a last lap crash, like they tend to, and
that's good.
Michael Jordan was the winning car owner. He was carrying the winning driver's son, probably 2 years old, out to his dad, and he's like, "Are you ready to celebrate?" He's like, "Yeah." And, here's Michael Jordan with the kid up, on his shoulder, and his driver. I mean, Michael Jordan's like looking down at him like this. There's a height difference. But it was amazing because, this is the first time they've won. This was their 6th race they won at 2311 Racing. But the first one where MJ was there.
Oh, that's fun.
He finally got to celebrate with the team. And
yeah, that's great.
It was a complete wreck fest. One of the drivers is out this week. Probably going to be out for a while because he broke a vertebrae
Oh
in his
no!
back.
Yikes!
I did not see the clip of him driving the car, and basically it destroyed it. The car was destroyed. The hood was up. He's driving around. He comes on the radios. I don't think this is good. I don't think I'm okay. And
Oh wow!
having a back issue. So they're putting a rookie in his car. So we got a lot of rookies coming to Dover this week. Should be very interesting. So
that'll be fun.
Looking forward to it.
Yeah, that's good. That's good. So this is an interesting thing, right? Whenever injuries happen in NASCAR, especially if they're high profile, change tends to come shortly thereafter. Are we in for new safety measures, or is this a fluke one?
I don't know. This was a fluke. I mean, there were a lot of flukes in this race. Because one car actually finished the race, finished like the last quarter mile on its side, riding the wall.
Oh my gosh!
I mean,
wow,
it's not bad, but
my God.
When we lost Dale Earnhardt, they put in place the Hans device to support the head, and there were a couple other things. A couple years ago, we had Ryan Newman. And the result of his crash, they put another bar in the car. But the car they're running now, 2 years ago, there was a rash of concussions. And they made sweeping changes to the car before last year and made it much softer. So the rear end crumbles crushes instead of just being so rigid that energy passed to the driver. But, So we'll see. I mean, they take a lot of those cars that are wrecked back to the R&D center, tear them down, see what's going on, what needs to be fixed. Because the
thing I'd love to
safety.
Right, a thing I'd love to get the accounting of is one of these like 2311 or somebody. I'd love to know like what that looks like, and I'm sure their R&D is a pretty substantial portion of their revenue. That's a metric they're looking at, I'm sure.
Yes, it is. But they have to look at earned R&D, which might come from their manufacturer, Toyota, versus how much they're actually paying for. Okay. So some of those benefits they have to look at. But speaking
probably got a lot of
that, there was a an X battle going on between Denny Hamlin.
No.
The owner of 2311 and the driver.
Oh, I was wondering who the 11 was.
Yeah, of the FedEx 11 Toyota, and Marcus Smith, the owner of Speedway Motorsports, and they own half the tracks along with NASCAR that owns the other half. Well, there were issues with some track and some other things, and they got into this Twitter war over who's putting more money into the business. Well, of course, the tracks are doing it because, they have a lot to do. And the problem happened because they repaved one of the speedways, the road track in Sonoma, California. So they were testing and the asphalt was coming up in patches. So Denny's like, you did a cheap job there. We're putting more money into our business than you're putting into yours. And I mean, this went on for like 4 days, this pissing contest between the two of them. And
who won? Who released their financials? Prove it.
Released their financials, but
I
think the fans won.
Can't believe it without the facts. The fans won. That's good. That seems right.
Actually, because it was very entertaining.
Yeah. That feels right.
Yeah.
That feels right. Well, wonderful. Hopefully the fans keep winning. Hopefully business owners win all of their metricing as well, and hopefully I win driving to Galveston this weekend. We'll see how that goes.
There you go.
Kristy, thank you for joining us today. Thank you for talking to us about metricing. Jay, as always, we will see you next week. We're going to be back on Friday, probably back live. Maybe we'll even tell the world about it this time and see what happens.
Yeah, there you go.
Thank you all for coming today. Thank you for listening. This was On the Rocks. We will see you next week.